Disclaimer, ang sulod ani nga vedio for information lang wala mag-inganyo na mag-invest.
Global financial system is melting down faster than an ice sculpture in a sauna. And trust in traditional institutions is about as strong as a wet paper bag. It was the perfect storm. Then, out of the digital ether, emerges a mysterious figure, or group of figures, known only by the pseudonym Satoshi Nakamoto. This shadowy figure, who may or may not be a supercomputer living in a basement somewhere, unleashes a revolutionary white paper upon the world, outlining a radical new vision for money. Bitcoin. Little did we know this cryptic document would ignite a financial revolution, challenging the
very foundations of the global economic order and giving birth to something truly extraordinary. Now, before we get into the nitty-gritty of Bitcoin, we need to understand what makes it so fundamentally different from the financial systems we're used to. See, our current system relies heavily on these things called central banks. Think of them as the stern librarians of the financial world. They control the flow of money, set interest rates, and generally try to keep the whole system from going haywire. But here's the catch. They have a lot of power, and like that friend of yours who hogs the karaoke mic, sometimes they abuse it. Bitcoin, on the other hand, throws the whole concept of a central authority out the window. It operates on a decentralized network, meaning no single entity, government, or rogue AI has control over it. It's like the Internet of money, a distributed, open-source system where transactions are validated and recorded by a network of computers around the globe. This decentralization is the bedrock of Bitcoin, and it's what makes it so darn revolutionary. Now, let's rewind back to 2008 for a moment, shall we? The global financial system was teetering on the brink of collapse, thanks to a toxic cocktail of irresponsible lending practices, deregulation, and enough financial jargon to make your head spin. Banks, those pillars of financial stability, were suddenly looking about as trustworthy as a used car salesman with a $10 bill glued to his shoe. People were losing their homes, their savings, their minds. It was chaos. And amidst this financial carnage, along came Bitcoin, offering a glimmer of hope in a sea of despair. Bitcoin's decentralized nature, its promise of transparency and security, resonated with those who had grown disillusioned with the traditional financial system. It was like a digital life raft in a sea of financial turmoil, offering an alternative to the institutions that had so spectacularly failed them. So how does this whole Bitcoin thing actually work? Well, imagine you want to send money to your friend across the country, or, across the internet. In the traditional system, you'd have to go through a bank or a financial institution, a middleman, if you will. This middleman takes a cut, adds some processing time, and generally acts as a bit of a buzzkill. With Bitcoin, it's like cutting out the middleman entirely. It's like buying your friend a beer directly instead of having the bar run interference and charge you extra for the privilege. This peer-to-peer network is the backbone of Bitcoin's decentralized structure, allowing for faster, cheaper, and more direct transactions. It's like Venmo on steroids, but instead of being controlled by a tech giant, it's controlled by, well, no one. Now you might be thinking, hold on a minute, if there's no central authority controlling Bitcoin, how do we know it's secure? What's stopping some digital bandit from running off with my hard-earned digital cash? Well, that's where cryptography comes in. Now, I'm not going to bore you with the technical details because, frankly, I don't understand them myself. But in a nutshell, cryptography is like Bitcoin's digital security guard. It uses complex mathematical algorithms to secure transactions and protect against fraud. Think of it as a digital vault, guarded by 1,000 mathematical locks, each one more difficult to pick than the last. It's this robust security that makes Bitcoin so incredibly difficult to hack or counterfeit. So rest assured, your digital gold is safe and sound, unless you lose your private key, but that's a whole other story. Underneath all the technical jargon and hype, Bitcoin is essentially a giant, decentralized public ledger called the blockchain. This revolutionary technology is the backbone of Bitcoin, providing a transparent and immutable record of every single transaction ever made. Imagine a giant digital book where every time someone sends or receives Bitcoin, it's recorded for all to see. And not just see, the blockchain is replicated across countless computers worldwide, making it virtually impossible to tamper with. This transparency and immutability are what make Bitcoin so trustworthy. There's no need to rely on banks or governments to keep track of your money. It's all there, out in the open, for everyone to see. So there you have it, the wild, wacky, and undeniably revolutionary world of Bitcoin. From its humble beginnings as a fringe experiment to its current status as a global phenomenon, Bitcoin has fundamentally changed the way we think about money. Its decentralized nature, its cryptographic security, and the revolutionary technology of the blockchain have all converged to create something truly unique, a financial system that operates outside the control of governments and institutions. And as Bitcoin continues to evolve, it's paving the way for a new era of decentralized finance, where power is shifted back into the hands of individuals. Bitcoin. The very word evokes images of a volatile and unpredictable asset. Its price history reads like a financial thriller, complete with dizzying highs, crushing lows, and unexpected plot twists. From its humble beginnings as a fringe experiment to its current status as a mainstream investment, Bitcoin has taken the world by storm. Its journey has been marked by both euphoria and despair, often leaving investors and observers alike scratching their heads. This roller coaster ride began in 2009, when a mysterious figure, or group, using the pseudonym Satoshi Nakamoto, unleashed Bitcoin upon the world. It was an ambitious project, to say the least. A decentralized digital currency, free from government control and the whims of central banks. The early days were marked by skepticism and uncertainty. Bitcoin was a novel concept, difficult to grasp for even the most tech-savvy individuals. Its value was negligible, with one Bitcoin worth less than a penny. Fast forward to 2024, and the landscape has changed dramatically. Bitcoin has captured the attention of Wall Street giants, tech titans, and even governments. Its price has soared to unimaginable heights, reaching tens of thousands of dollars per coin. Yet, the volatility remains. The market is still susceptible to wild swings, driven by a complex interplay of factors, from technological advancements to regulatory pronouncements. This essay delves into the fascinating and often bewildering world of Bitcoin. We'll trace its price history from its inception to the present day, exploring the key events and forces that have shaped its trajectory. Join me as we embark on this journey, unraveling the mysteries and complexities of the Bitcoin roller coaster. On January 3, 2009, the Bitcoin network came to life with the mining of the Genesis block. This marked the birth of the world's first cryptocurrency, a revolutionary concept that promised to upend the traditional financial system. The early adopters were a motley crew of cypherpunks, libertarians, and tech enthusiasts, united by their belief in the transformative potential of Bitcoin. During these early days, Bitcoin was a niche phenomenon, largely unknown to the general public. Its price was negligible, often fluctuating in fractions of a cent. The first real-world transaction occurred in May 2010, when a programmer named Laszlo Hanyecz famously paid 10,000 bitcoins for 2 pizzas. This event, now celebrated annually as Bitcoin Pizza Day, highlighted the growing acceptance of Bitcoin as a medium of exchange. Despite its novelty, Bitcoin remained a largely experimental project. Its infrastructure was rudimentary, and its security was untested. The community was small and fragmented, with developers scattered around the globe. However, beneath the surface, a quiet revolution was brewing. The seeds of a global financial movement had been sown, and it was only a matter of time before they began to sprout. The year 2011 marked a turning point for Bitcoin. As awareness grew, so too did its price. In April 2011, Bitcoin reached parity with the US dollar for the first time. This milestone ignited a frenzy of speculation, propelling Bitcoin's price to new heights. By June, Bitcoin had surged to over $30, marking its first major price bubble. This meteoric rise was fueled by a confluence of factors. Media attention surrounding Bitcoin intensified, piquing the interest of investors and speculators alike. The emergence of online exchanges made it easier for people to buy and sell Bitcoin. Moreover, the Eurozone debt crisis was in full swing, leading some investors to seek refuge in alternative assets like Bitcoin. However, the bubble was not to last. In June 2011, the Mt. Gox exchange, then the largest Bitcoin exchange in the world, suffered a major security breach. This event, coupled with concerns about Bitcoin's security and its use in illicit activities, triggered a sharp price correction. By November, Bitcoin had crashed back down to $2, erasing months of gains. The first Bitcoin bubble was a harsh lesson for early investors. It demonstrated the extreme volatility of the cryptocurrency market and the importance of security in this nascent space. Despite the crash, however, Bitcoin had proven its resilience. It had weathered its first major storm and emerged, albeit battered, on the other side. The years following the first Bitcoin bubble were a time of rebuilding and consolidation. Developers worked tirelessly to improve Bitcoin's security and scalability. New exchanges emerged, offering more robust platforms for trading Bitcoin. The community, though shaken by the Mt. Gox hack, remained steadfast in its belief in Bitcoin's potential. However, the shadow of Mt. Gox loomed large. In early 2014, the exchange filed for bankruptcy, revealing that it had lost a staggering 850,000 Bitcoins, worth hundreds of millions of dollars at the time. This catastrophic event sent shockwaves through the Bitcoin community, leading to a prolonged bear market. Despite the turmoil, Bitcoin's price began to recover in late 2013. This resurgence was driven in part by growing interest from institutional investors who were beginning to see Bitcoin as a potential store of value. The price of Bitcoin reached a new all-time high of over $1,100 in November 2013, surpassing its previous peak. However, the Mt. Gox saga was far from over. The fallout from the exchange's collapse continued to plague the Bitcoin ecosystem, highlighting the need for greater regulation and oversight. Despite these challenges, Bitcoin had once again demonstrated its ability to bounce back from adversity.